So what is the data saying? How is sentiment, and also how 2026 will be regarding the markets? So let's jump in, and I have just cut some short clips from where I'm watching, what kind of data I'm watching. So just enjoy it, and I put 1.25 speed, so it will get faster. That's why maybe he talks a little bit fast, but just pause and watch these charts, and yeah, enjoy it.
Of this, that Bitcoin is trading at a significant discount versus the underlying liquidity fundamentals. And it doesn't even account for the 12-week lead, right? Which suggests that the gap should even widen as we move through Q1. So I think, in other words, if Bitcoin were tracking this the way it historically has, much like the NASDAQ is doing now, small cap, other risk assets, which again is something I'll talk about in a minute, it would be trading closer to, let's just call it 140,000. Okay? What we know is all of these things broke on October 10th. That arrow that I've pointed out there, that was the day of October 10th. So the analogs broke down, a lot of the correlations broke down. We've explained at length what happened, who we believe was involved. Again, without that event, things very likely would have played out a lot differently. Unfortunately, what we saw was a roughly $19 billion leveraged crypto position liquidate in a 24-hour period, which was the largest crypto liquidation, in history. And we're still clearly feeling, the effects of that. But if we come back to the fundamentals, okay, and specifically one of the most important variables for risk assets, the dollar, we said we were expecting a final move lower. And it's, once again, annoyingly, because the dollar has moved down so much over the last couple of days since I presented in Miami, this is another chart where I just had to update it, because before it was still at like, not at SESI well. So here I'm bringing back this excess fear gap. And I talked about this in Q1 of last year, you guys will remember. And more recently, starting exactly at 1010, we've been diverging from the economic fundamentals. And if you look at SESI today, I mean, the US City Economic Surprise Index just moved to the highest level since December of 2024, which means that data is coming in better than expected. So how do we read this chart? Well, what you're looking at is a 3-month rate of change in Bitcoin prices, which is currently down around 20%, which means if you look at a period from 3 months ago, Bitcoin's down 20% over that period, around that, right? However, based on the normal correlation with economic data, in the same way that all risk assets are correlated to economic data, in what I mean by that is, as economic data, something I've explained at length, comes in below consensus expectations, and because the market is priced off of the consensus estimates, and if data is coming in lower, it has to revise higher or has to reprice that higher, which if I was to show you this chart versus NASDAQ, it is obviously happening. But Bitcoin is still completely diverging from this. And so what does this say? Because this is basically suggesting that if we ignore the most recent spike, that Bitcoin should have ended the year around 40% higher. So how do we interpret this chart? So what's fair value? So to answer that, we have to look at prices roughly 3 months ago. And at that point, Bitcoin was trading, just for easy math, let's just say it's 150,000. Applying a 40% increase means that Bitcoin would be trading at around 160,000. So I think somewhere between 140 and 160,000 is where I believe Bitcoin would have ended the year if 1010 hadn't occurred. Okay. And if you fast forward to today, and the market shock has still created this lasting gap between where Bitcoin is trading and where I think it should be trading based on here, the macro fundamentals, previous liquidity fundamentals. And I'm going to show you more charts on the liquidity stuff in a minute. If we assume it's now 60%, right, from current prices, that's fair value at around 130,000. But like I said, it just doesn't stop there, right? Financial conditions indicate a very similar disconnect, somewhere around that 40% level. And then the same is true when we look at Chinese liquidity conditions, where up until 1010, these two lines were literally perfectly correlated. And here, once again, there's that 40% discount, okay? And just like with the SESI chart, we saw a similar excess fear gap opened up in Q1 of last year, which is the original kind of excess fear gap versus SESI. But then you can also see that here. And what happened was that ultimately what drove prices or drove the divergence was this view that tariffs were inflationary and that was going to cause the Fed to not cut rates and all that, all that stuff, which, of course, if you remember back at the time, both reading in MIT and my videos, I pushed back on hard that tariffs were not inflationary. And then once the market kind of digested that news, everything kind of snapped back. And then the other contentious point about Chinese liquidity is that something I've talked about before, and I'm going to show you a couple of examples about this, is that it doesn't drive risk assets. And my point had been previously is that if I remove PBOC liquidity from our liquidity composite, it drops by 30%. Another really important point on Chinese liquidity, especially given the view that view that it doesn't impact risk assets, is that the data just doesn't support that. The previous chart alone already challenges that assumption. But if we just look at the typical 4-year cycle, focus on 2018, 2022 period. Okay. I mean, historically, the major 4-year cycles we've seen in Bitcoin all coincided with large liquidity drains from the PBOC. And now more recently, the swings in the PBOC balance sheet, if we look at 2025, actually look a lot, although it's slightly exaggerated, actually looks a lot like the price of Bitcoin over the past couple of years. And that relationship is captured, as I say, very cleanly in the 3-month rate of change chart that I showed you earlier. But here's why this matters. Because our very out of consensus call heading into this year was that the Chinese balance sheet had not peaked and that it would continue to rise and rise by as much as another $1 trillion in 2026. Because again, China's already in phase 2 of the everything code. Rates came lower. And then once rates come low enough, the debts can be rolled, right? So this is the debt refinancing cycle. And so this alone matters, even without factoring anything we laid out in the liquidity flood thesis. Right? Historically, a sustained expansion in the PBOC balance sheet has been a major tailwind for Bitcoin and risk assets more broadly. I just showed you that visually. Now, if I look at the year-on-year assets, and again, I think that this decoupling is still temporary, but we'll talk about the technicals in just a minute. But when I talk about PBOC liquidity and risk assets, I mean, if we just come back to risk assets, Bitcoin is the only major outlier. It's diverging not just from the macro, not just from the liquidity, but also the broader market itself. I mean, here it's just, I've taken an index of, we can see at the top. I mean, anything that's been historically correlated and classified as a risk asset. So almost every other asset that, let's say, over the last 4 years has been correlated to BTC is sitting near all-time highs, while Bitcoin's not. And then the view more recently is like this, this looks like 2022, right? Or the 2022 peak. Fine. But look, if that was happening, if you look back at 2022, all risk assets were adjusting. You see, so there was no outlier. And so when I said earlier, when am I going to turn bearish and just accept that the cycle's rolled over? Well, A, when the data suggests that, but also B, when I start to see defensive positioning across the market itself. And what we're seeing is small caps outperforming large caps. We're seeing cyclical equities outperforming. We're seeing commodities pricing in a recovery in the cycle. And so there's just this outlier. And if you've been in macro long enough, you have to have conviction, but you also have to understand that divergences don't last indefinitely, right? And so the view I'm trying to walk you through here is that we believe this gap closes aggressively in 2026 as PMIs move higher, as liquidity still moves higher, right? So on and so forth. And the other, thing finally, just to kind of simplify everything, forget the SESI, forget liquidity. Let's just look at a log regression channel of Bitcoin off the low point in Q4 of 2022. What I always like to see in data is convergence. And so very clearly, if we just talk about fair value, once again, assuming this bull market's not over, which is not our base case, as you know, which I'm trying to outline here. Today, around this basing point, that fair value level is 140,000. Okay. And 160,000 is exactly the same number I showed you at the start of this presentation with liquidity in the 12-week lead, suggesting it should be somewhere around there. And so that's when you have several very different measures of fair value using entirely different methodologies, which all kind of arrive at the same conclusion. I think it's about as good as it gets in macro. And then it's just about trying to assess probabilities. And that's really the point. Like, no matter how you approach this, whether through liquidity, macro, financial conditions, other risk assets, or a bull market log regression channel, Bitcoin is 2 standard deviations oversold and currently extraordinarily disconnected from really everything. And then in terms of this pattern, we align with what I'm thinking and been doing, is he bought more Bitcoin in the past 2 months than he has in his entire career. So you're setting up for something, and I'm showing you the data. This market is not broken. I talked about quantum in my article. It's not broken. It's just sentiment is really downbeat. And as I said to you, the sentiment that you're feeling now is the 4-year cycle is in control because prices are still moving lower. And therefore, we didn't sell the top. We've got 11 months of pain. We can't have nice things. We did F it up. And this is the trade for the next 12 months. But I just don't think that. Like I said, I did this yesterday, so prices are a little bit lower. But if we go to 80.78, that would be the trend line, which I think holds because I don't think this bull market's over. And then Raul sent me this chart yesterday, and I think he also posted it on the platform, but it's kind of that Wyckoff accumulation pattern, which, by the way, this is fitted, obviously, so I don't really think you can be extrapolating patterns. But I mean, the low point is right around just below 80K. Can we get there? Yes. And you know what's going to happen if that does happen, is everyone is going to say it's over because it's a new low, right? We made a lower low. But once again, remember the RSI chart that I showed you. In 3 of the last 4 times Bitcoin was oversold, we always made a lower low, and that narrative was always there. It's over. It's over. Sentiment is very depressed. I get that. But based on everything I've just presented, the divergence between risk, macro, liquidity, the fact that liquidity has not peaked, right? And then, here, if I just take, this is Bitcoin seasonality, all bull years, excluding down years. So basically, if you think back to the Bitcoin seasons, I've just removed the winter years, and it's just the average. And of course, no, this is not going to track this perfectly. No, we're not, it's not going to go up in a straight line. What I'm just trying to illustrate here is January typically can be flattish. Okay. What I'm just trying to illustrate here, using this immense amount of data, the growth views, the inflation views, right, the liquidity views, is that directionally, I'm of the view that this bull market isn't over. And it's very hard for me to feel that, to accept that because of just being so grounded in all this data. And my point also with presenting all of this stuff is that you can now make up your own mind. You don't have to agree with me, but at least let me show you the data, and then you can make up your own mind. And what I said ultimately is some people at the crypto gathering had sold in December and, done well, right? In the sense that they were of the view that the 4-year cycle